Hello and welcome to another update video about Natgas. Quick update here, not much more to add to yesterday. I think it might be forming here either a bit of a flat structure in this wave 4 that we're tracking or a triangle. I encourage you to also check out yesterday's video for maybe a bit of an additional commentary if you haven't done that. The situation overall hasn't really changed. We're still overall tracking further upside. At the moment, it's without surprise to anybody who's been watching the previous videos that we are now either moving sideways or coming down a little bit because we have likely reached a wave 4. So a wave 4 is typically either a sideways oriented, well, you could call it sideways correction. Yeah, I'm talking about this bit here. Either a sideways correction, well, it is generally a sideways correction, not always, but most likely. And a sideways correction could be a triangle. Now, obviously, we're operating here on a very small wave degree, but for a triangle, this could certainly become a triangle. It's a little bit too early to confirm that, but we would generally call that a bullish pennant. Now, in Elliott wave language, there isn't something like a pennant, but we would still call it an Elliott wave triangle, which would be a 5-wave move, could be a contracting triangle that appears likely. And a wave 4 can be a triangle. This is the important observation here. So if we know Elliott wave, then we know that in a wave 4 we have to expect a so-called sideways correction. Now again, a sideways correction, what they class as that, could be a triangle. I like triangles in a wave 4 because that could be an A wave, a B wave, maybe the C wave already in, maybe a little lower. And then we would need another lower high, which would be the D wave, and an E wave, a higher low. Then we have 5 waves, basically complete or nearly complete in this wave 4. And we could break out to the upside from here. A confirmation of a breakout into the expected direction, which would be to the upside from here, if it's a triangle, would be a break above the B wave high at $3.45. If we get a break above that, that would be a good indication that the 5th wave to the upside has started. And that would be most likely wave 5 of wave 3, and then another wave 4 and another wave 5. So it should still ideally escalate a little higher. The other option, of course, is that this is not unfolding as a triangle, but as I said, as a so-called flat structure. A triangle obviously is a 5-wave move, and each wave in the triangle is corrective. So the A wave down there is corrective, the B wave is corrective, and now we need to see how it carries on. But in a flat structure, we also have the A wave as a 3-wave move, the B wave as a 3-wave move. Here they are identical, and then the C wave down would follow. Okay, so this is basically an alternative perspective. And they are both valid corrective structures that could play out here. This could eventually get something much more complex, but it shouldn't get too long because yeah, we're operating on a small degree. Now, what can happen, and that is something that's likely, is that wave 2 and wave 4 have similar length time-wise. Here, wave 2 took basically 10 days, yeah, roughly 10 days. So this could also stretch out maybe a little bit more before it moves higher, okay? Time-wise, yeah, it should take a little, ideally, unless it's really bullish. But either way, the relevant support that we can use is $3.04. So that's sort of, okay, it's not a hard rule, but it's basically pretty strong guideline that we don't want the price in a wave 4 to break below the 50% retracement level of the 3rd wave. And the 3rd wave might have ended there with the last swing high, which was here at $3.47. So any pullback should ideally hold above the 50% Fibonacci retracement, which is, again, $3.04. And then it should still escalate a little higher from there. And yeah, unless we now break below that $3.04 level, the wave count, the projection overall, should send us higher at least, well, at least one more high, but I would like to have 3 more highs potentially. Yeah? So we're entering a phase now where we should see wave 5s to be complete, then a wave 5s of 3s, then always a wave 4. So shallow pullbacks in an ideal world. It could take a little while because we're getting now to a point where the 3rd of a 3rd wave rallies are over. Okay, so the next high should be a 5th wave of a 3rd, then another 5th wave of a C wave of a 3rd, and another 5th wave, and This means we should start to see some bearish divergences maybe in the coming weeks to appear. If this is the correct wave count, we should also not expect like a radical rally as we had it. I mean, don't call it radical, but you know, it wasn't that extreme. Okay, it wasn't that much of a screaming rally. It was more a little bit of a bit of a rally. Okay, maybe a screaming rally compared to what we had here before, but that was a good example for a third of a third wave. And the point I try to make here is it should still push higher, but should get more and more exhausted as it pushes higher. That's what the wave count would suggest to us, because as we get into those later stages of a third wave and of a fifth wave, of a C wave, whatever degree you're looking at here, we normally start to see those divergences appear. Now, at the moment, we won't have a divergence because we were just moving up in a third of a third wave. And typically, in a third of a third wave, this is typically where you have the strongest reading on the indicator on the RSI. So as you can see here, very clearly, it's the strongest reading that we've had in a while on the 1 hour RSI. That basically confirms our wave count. I would never let an indicator determine my wave count, but it can confirm it. Yeah, it can confirm it. Not determine, but confirm. So, and this is exactly what we see now. The 4-hour chart as well, yeah, the highest reading, because we are in a third of a third wave rally. Okay, now we enter the fourth, and then maybe it will consolidate a bit. Maybe the RSI will go down a little. Then we can push higher. Maybe, I mean, maybe it's still a third of a third, yeah. But if you go one step lower, it's the fifth wave of a third. But it still is a third wave, sort of, yeah, of a third, okay, within a C wave. Don't want to make it too complicated here, but what I want to express is that we should start to see shortly, after that strong push on the RSI, we should start to see those bearish divergences appear slowly. And that would not be a bearish sign. It would just mean that, okay, we start to get exhausted. It can still push higher. The RSI can remain embedded very high, quite long. And also here, yeah, you see it on the daily RSI getting overbought. Now, that's not necessarily bearish. Some people say when you're overbought, it's bearish. No, it's not. It can be embedded quite a bit, and there is still plenty of space in the box. Yeah, that's my update about Natgas. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, you might want to check out our stocks and S&P 500 service that we launched last week. If you're interested in daily updates, video updates, written updates about the S&P 500, and stocks and shares, selected stocks each day of the week, then check out that service. You can find the link in the video description. So yeah, you might want to check it out if you're interested. Crazy movements today on the S&P, so quite interesting. But yeah, enjoy the rest of the day and enjoy the rest of the week. See you in the next video. Bye bye.